class than the final class, and this one is basically on hard to see divergence, also known as hidden divergence. Okay, this, like I said, is the most difficult one to see. You can't hear me, Ashwani. Can people hear me? Please say yes. Yeah, other people can hear me. Yeah, most people can hear me. Okay. Okay, you can hear me now. Okay. Okay, good. So, anyway, um, this this is the most hardest part of divergence to spot it, and it's basically with the trend. It's the hardest one to see, but they say it's one of the most reliable um, divergence tradings to see. Which divergence is most rewarding? Well, I think they all are. This all I can say is they're all about equal in that way, but well, maybe hidden divergence would be um, the safest one because it's with the trend. Where all the other ones, the other two, are counter trend. Okay. So anyway, I'm going to close this here now. Okay, it's not question time. Um, but anyway, I'm going to go on here now. We're going to learn how to spot hard to see divergence. Okay. First, we'll go over that, and then I'll show you the fatal flaw of divergence, and I'm also going to show you how I use the OSMA to get into entries quicker than a trendline break, but it is riskier. Okay. So anyway, like easy to see divergence and double top and double bottom divergence, again, okay, we need to be thinking as the market is trending down or trending up. We need to be thinking about, looking for, as you know, the first two things is a low and a lower low. Let's say the market's going down. You're looking for a low and a lower low, okay, or a double bottom, okay, and you're looking to buy, okay. But also at the same time, which is we're looking for hard to see divergence now, what you're going to be looking for is these pullbacks in the market where I'm going to show you in a second, and you're going to look for a continuation of the trend, okay? So this is basically it. So I'm going to show you. We have one right in front of us, okay? And I'm going to show it to you, okay? How to see hard to see, holy jeez, how to see hard to see divergence before it occurs, okay? So let's take when the market started moving right here, okay? This was basically the high of the day right here, okay? So the market started coming down, okay? It was in a sideways channel here, okay? But we knew right from this candle that it looks like it's going to start into a downtrend, okay? So anyway, it put in this low, okay? It came up and put in this higher low right here, then the top, okay? Then it came down and put in these lower lows, lower highs, lower low, lower high, lower low, and much higher high, okay? So what we're looking for in the market when we're looking for hard to see divergence, you're looking for pullbacks, okay, with, geez, this is hard to explain here, with the trend, okay, but you're looking for the opposite to happen on the indicator, okay? So let me draw this out for you here, okay? So we're going to draw it from here to here, okay? So we started our downtrend here. We had a pullback, okay? Then we came all the way down, and we had a nice pullback again. But this pullback here was a lower high than this high, okay? But on the indicator, it was a higher high from a lower high, from a lower low over here, I guess you could say. See, it was the opposite, okay? So here is your, well, you could have drawn it to there, but anyway. So here is our first pullback and our second pullback. But if this high was higher than this lower high here, it would not be, okay? Would not be, if it was like that, okay? Say this high came up to here, okay? That would not be hard to see divergence. Bearish, hard to see divergence, because this is not divergent, okay? It needs to divert from each other, okay? So like I showed you last week, you know, for this to work, it's got to be like this, and on the indicator like this, okay? If they're going both in the same, you know, in the same angle like this, it's not divergent, okay? So let me erase these now. Okay, so that is what you're going to be thinking. So when the market is going down, you're always going to be thinking, okay, where is there a pullback? And then, you know, it's going to put in lower low and then another pullback, but the pullback will be a lower high than this high, okay? And sometimes you'll find where, let's see, hold on, where from the very top of the move, you'll have this going like this, okay, and this going like this, okay? There's people out there, they'll say that's divergence. That's you know, that's hidden divergence. That's hard to, as I call it, that's hard to see divergence. But in my opinion, it's not. And the reason why it's not is because you can't take it from the high of the day or the high of the move. You need to take it from a lower high after it starts, you know, making the trend of the current trend, and then a lower high over here. It can't be from the high to the lower high. It has to be from a lower high than the original high of when it started the trend to a lower high. And I hope you follow what I'm saying there. So anyway, let me blow this up a bit. Okay, I just showed that to you basically. Let me bring this back here now. And it was basically to there. Okay. Now I'm going to show you how I use the OSMA, okay, as an entry tool as opposed to using a trend line. Now, I want you to clearly understand that your safest entry, point of entry, is when you use a trend line, okay? This here, using this as your entry, is a little bit more high risk, okay? But it can get you in way closer to the top and way closer to the bottom, okay? So as you can see here, when it crosses the zero line on the OSMA, it will paint this dark blue color as I have it, okay? And then it got stronger and painted another higher blue bar, okay? Then it painted another higher blue bar. So why did it create those three high, blue bars? Because the trend was strong up, okay? Even though on this one it wasn't. But anyway, it was a powerful move up. We ran up basically 28 pips in about 45 minutes. So how I look to trade this is, on this one it wasn't the best, but it was the entry. So as you can see, how it goes from a dark blue color to a baby blue color, or whatever you want to call that color, it means that the market, it fizzled out. The strength of this move fizzled out, and this candle closed lower. It came down, did a retracement, closed lower. So indeed, actually this candle right here, this big bearish red one, okay, right there, okay, it closed lower, much lower. In other case, this isn't the best case scenario. There's other cases where it'll get you in way up here, okay? But in this particular case, it it um it created this bearish candle here, so it changed the color in the OSMA, which is basically telling you that it's lost its strength, okay? So then once this first bar here, different color paints and closes, right? This next one will open. So when the next one will open, it's going to open the exact same color as this one. So your entry on this trade would have been right here, okay? So you would have got short right here using the OSMA, okay? So there's about, 35 pip stop, and it went down about 30 pips. So anyway, that's how I use the OSMA as an entry tool. But this was not a good example. Let me find a good example for you. Where can I find one? Let's see. Hold on. There's got to be one here somewhere. You see, it's kind of tricky to use that as well sometimes because, see right here, we have a high and a higher high, okay? We got a high but a lower high here, okay? So it didn't go from an orange color to a red color, okay? Or I mean from, a blue to a lighter blue up here. It was already in the red. So in here, if you didn't want to wait for this trend line to break through here, okay, on here, like this, you would have, looked for some weakness in the indicator. So right up here, once it put in this, here, let me make this bigger. Come on. Where is that trade now? Okay, hold on. I got to go scroll back and find this. Okay, right here. Okay. So we put in the high and the higher high. Then we have this nice bearish engulfing candle here, okay? So see, right down here, it was just tiny, okay? But then you would have wanted to see some, some confirmation with this saying, okay, it's getting longer now and weaker. So you would have got short, like probably on the opening of this candle right here. This is where you would have got short, okay? So you would have got in, basically, 10 pips better than if you would have waited for the trend line to break, if you see what I'm saying. And your stop would have been a lot smaller, okay? It would have been 10 pips smaller. So you would have got short right here on the opening of this candle using the OSMA as your entry, okay? As opposed to waiting for the trend line to break and getting in right here. Like I said, I promised I would show you this entry, okay, with the OSMA, but I really want you guys to concentrate on drawing the trend lines and, getting in on the trend line break because it's the safest, point of entry. Because right up here, okay, how do we know that it's going to go lower? We don't know. Just because it says on the OSMA that it looks like it's getting weaker doesn't mean it's going to go lower. It could have gone right back up again and took out your stop. So that's why when you would have waited for the candle to, close nicely below this trend line, you knew that it was much safer to enter here than it was up here. Okay? So anyway, I'm going to go back to the hidden divergence again, okay, but I just wanted to show this quickly. Do we have any questions on how to enter with the OSMA? Yes, Doug, that's it, yes. You go back to that trade. Okay, so you got your first lighter blue on the OSMA. When that one closed and it's shown the lighter blue, once it paints it and that bar closes, it won't repaint, okay? But there is times where it can repaint when it's close to the zero line. But it was far from the zero line. It never would have repainted. okay? But if it was going up, if it shot right up, it would repaint to blue. That's why you're waiting for this bar to close, okay, Doug? And then on the open of the next one, which would have been this candle right here, you would have shorted it, and down it went, okay? What did he ask? What did who ask, Gerald? Doug? I just answered it. Yeah, okay. So you got that now, Gerald? Yeah. Okay. Does anybody have any questions on how you use the OSMA for your entry tool? Does everybody understand that? Okay. Yes, everybody understands it, I guess. It's not hard to understand. So this is why, this is why I use this color OSMA, because it tells me sometimes when the trend is weakening, or the strength of the move is weakening and going in the opposite direction. Okay, so let me just go back like that. I'm going to go find some more hidden, hard to see divergence. Can you use the OSMA as a target? I don't know how you'd use it as a target. I only use it as an entry. No, I don't use it as a target, Phil. Okay, so anyway, I'm going to remove the box here. Now let's go and find some more hidden divergence, okay, so that we need to go over a few of them so that you can see this, so you can understand this. We need to go find some bullish hidden divergence, okay? And there's some right here, okay, but it didn't really go anywhere. But anyway, it's kind of a bad example, but okay, so when the market, okay, is trending up, okay, we're waiting for a pullback in the market, and then another higher high, and then another pullback, okay? So let me blow this up. There's actually one right here, okay? So we know from here that the market is turned bullish, right? So it did its first pullback right here, okay? Then it went back up and did another pullback. Now, as you can see, this lower high is higher than this low from where the move started, okay? So we'll draw the line from here to here, okay? Now on the indicator, okay, right here to right there, I believe, that's your hidden divergence, okay? Oh, it's supposed to be drawn from there, okay, from here to here. There we go. Okay, so in this particular case, okay, because it's coming from the bearish side of the OSMA, okay, see the first one, it changed to an orange color. See, these are the colors I chose here, are dark orange, fire brick, deep sky blue, and blue, okay? So when price went up here, it got stronger. It went from bearish strength to less bearish strength. It got stronger in a bullish way. So on the open of this candle right here, which is this one, this is where you would have got long using the OSMA, okay, as your entry tool. Okay, so you see right here. Oh, no, it's not that one. It's this one up here. See, it didn't get you in very good, did it? See, sometimes it doesn't get you in good. But anyway, yeah, okay, so you would have got in here, okay, and your stop would have been about 30, 35 pips or so. 22 pips, 32 pips. So right there would have been your stop of 32 pips. See, and it only went up 20 pips. And it never, ever did hit your target. Okay? So, but that's hidden divergence. So here's the third thing that you need to be thinking in your mind, okay, is when the market's going up, you're waiting for the market to pull back like it did here, okay? Then you're waiting for the market to go up again, and usually in this case would make a higher high, but it didn't do that here, and then pull back again. Once it pulls back again, If that low is higher than this low, okay, you can draw your line and then see on the indicator, well, is this hidden? Is this, is this divergent or not? Because on the indicator, okay, it's got to be, it's kind of opposite backwards as the other two, as you can see, okay? The other two, we're always looking to draw lines like this, right? Okay? But in this hidden divergence, or hard to see divergence, as I like to call it, okay, you're drawing the line in an opposite angle, okay? And that's why I think it's harder to see as opposed to the other two type of divergences that we trade, okay? But as you can see, hard to see divergence is always with the trend, okay? So it's your safest point. So it's your safest divergence to trade because they say the trend is your friend until it ends, right? Well, that's why you can trade this successfully with the trend, okay? So let's find another one. See right here, okay, it came down, it put in this pullback. The trend's, is bullish here. Put in this pullback right here, okay, came up, and another lower low here. So here it is here, right? But on the indicator, it's not divergent. See, watch. So there's from there to there, and from here to here. See, they're both going in the same angle down. This needs to be going up like this for it to be divergent. So that is not divergence. That is not hard to see divergence, okay? However, we do have some right here. Let me show you. Oh, the chart's jumping a bit there. There we go. From there to there, and from here to here. Now see, this example here, okay, is the market started going up, so you're waiting for a pullback. You got your first pullback. Then it gone up higher, and then you got another pullback, okay, right here. You see now, this is where you have your low on the indicator, but on the opposite side that we always look for, the lower low or whatever you want to call it, on the indicator, usually we look for it on this side. But because it's hard to see divergence, we're always looking for it on the opposite side. So as you can also see here, we have negative on the OSMA, positive, and then negative again. Okay? So how do we get in on this trade? So here I'll show you the entry using the OSMA on this one. So when this bar here closed, candle I should say, okay, it changed to orange color. So then on the second open of the orange candle, orange color on the OSMA, you would have got long right here, okay? Oh, it keeps jumping on me. So you would have got long here. Your stop would have been 10 pips below here. You probably would have put it below 130 right here. And look, shot up 85 pips. And your drawdown, it was very minimal drawdown. Why? Because you were trading with the flow of the trend. So it's to trade hard to see divergence. It's less scary than trading easy to see divergence or double top and double bottom divergence because those two are counter trend. It's like you're anticipating the tops in or the bottoms in and you're getting in. But when you trade hard to see divergence, it's with the trend. So you're going along with the flow of the natural flow of the current trend, current near-term trend, that is. So anyway, that's it right there. And that was the entry. Now, if you were going to use a trend line, okay, to get in this particular case, you would have drawn it like that. You would have got in basically on the same, you would have got in one candle closer on this one, okay? And it still went up 94 pips, as you can see. Okay, so again, I'm going to repeat myself. The market's in an uptrend. It's going to you wait for it to put in the high. It puts in a retracement. okay, right from this candle, okay, right here, we had all this time, all the way right up to over here, to wait and see for this to happen, okay? So, like I said, when the market's going up, in this case, you're not looking to sell, you're looking to buy, okay? Because you're looking for hard to see divergence. So then it retraces, puts in another new fresh high or a few fresh highs, and pulls back again, okay? And puts in that lower high up here. Well, then you just look at the indicator, find it on the indicator, you have it, then you look for your entry. And sure enough, it continued the trend up. That's basically it for hard to see divergence. It's this basically in an uptrend, that's what you're looking for, and in the downtrend, let me go over this with you now again. Once you notice that it's in a downtrend, you're waiting for it to retrace back up, and then right from this candle, you knew once it started coming down again, you're waiting all the way right here from this candle, all the way down, all the way down, all the way down, until it retraced back up again, and you knew all these candles in advance. Let's see, it's 1, 2, 3, 4, 5, 6, 7, 24 candles, okay? So this is the 15-minute. That's 4 candles to an hour. That was 6 hours you knew in advance for this to set up. And then you just look for it on the indicator, and you look to get short with the trend. And that's basically it. Now let's ask to see if we have any questions. Okay. Let me go. I got lots of questions here. Where does it start? Okay, let me answer these questions here first. Okay, that's where it started, right here. For an entry using the OSMI, you are watching for the bar on its histogram to tick down. Is this correct? Yes, it is, Chris. You're waiting for it to get weaker or stronger. Yes, yes, Victor, for hard to see divergence, you're waiting for 2 pullbacks, either 2 dips or 2 rallies, okay? 2 dips to buy it or 2 rallies to sell it, okay? Victor says, point out pullbacks again. I think I did, okay? Nico says that move stopped at easy to see. I don't. You see, you guys, when I'm showing you this, okay, I removed this window. I couldn't see your questions, okay? So I think you guys can still see it, but I can't. That's just the way this GoToWebinar works. Milan says, this is a good example of hard to see divergence, a nice way to trend trade. Yes, indeed, Milan. Yes, indeed. And then Washwani says, when are you going to publish the manual? For the divergence, it will be there, ladies and gentlemen, today, okay? It will be there today. If not today, tomorrow. Everything's going to be complete in there by today for all of you to keep watching over and over again or read over and over again. It's Monday that we're going to start looking over the charts and looking at trades and might possibly see some trade setups right at that time, okay? Now Phil says, isn't it just as easy just trading the trend without worrying about the hidden divergence? Yeah, you don't have to trade divergence if you don't want to, Phil. That's your choice, but I'm just showing you the 3 different types of divergence. 2 are counter trend, and 1 is with the trend, and that is hidden divergence, which I call hard to see divergence. Okay. Now Cynthia is saying, would that be the only time on divergence that we would look at the left of the OSMA trend line? Then on double bottom high or easy to see divergence. We would take the direction of the Osma divergence. I don't know. I think what you're saying is the only time we look at the left of the, yes, is with hard to see divergence. You're always looking at the left of you, okay, and the right. Yes, if that's what you mean. And you're also drawing the line on the Osma in the opposite way. Yes, okay. I hope that answers your question. Oh, okay. You can't see the questions of the others. Okay, Doug. Okay. I didn't know. I'm a trader here, not a webinar specialist. Okay. Um, just sell the rally. Yeah, sell the rally and buy the dips. That's it. Buy the dips, sell the rallies. Yeah. Okay, thank you, Cynthia. Great, that answered it. Laugh out loud here. Yeah. Okay, Doug. Okay, so does everybody? Okay, let's say I have one more question here. So in hidden, you trade opposite to the Osma line, but in easy to see divergence, you trade the same direction as the Osma line. I guess so. If that's the way you want to analyze it, yeah. Because you're drawing, like I said, you're drawing the line in an opposite way on the Osma, as opposed to easy or double top or double bottom. Yeah, yeah, yeah. That was Cynthia's question as well. Yeah, yeah. It's the opposite the way you draw it. So even though this is harder to see, does everybody understand? Did I explain it clearly enough? How to see and spot hard to see divergence before it occurs. Okay, we got a few yeses. It's very clear. Perfect. Okay, great. That's terrific. And even if, yeah, and even if if you don't, you can go and rewatch the video, of course. Yeah, yeah, for sure. Dave says the way to explain it would be to think of the price bouncing off the line. It's a hidden. If it's hidden, it goes with the trend. Yes, yes, indeed. Okay, so I'm glad that you all got that. So now today, so far, I've taught you uh, hard to see bearish divergence, hard to see bullish divergence. I also taught you how to use the Osma as an entry tool. But as I told you, it's better that you keep practicing drawing your trend lines, and then once it breaks the trend line, then you're good to go. So, what does Victor say? Our probability is the same for all three divergences. I wouldn't say that. Like I said, the safest one to trade is the hard to see because it's with the trend. The other two are counter trends, so they're against the trend. So they're a little bit more risky, if that answers your question. Okay, so anyway, I want to show you a picture here now that it's something that looks like it's divergence, but it's not. Okay, so I'm going to pull this picture up. And here we go. Does everybody see this picture? Yes, okay. Cool. So here, okay, this is from Ninja Trader. That's why this chart looks different. I also have Ninja Trader as well. This is the MACD on here. It's not the Osma. They don't have an Osma in Ninja Trader that I know of. Anyway, as you can see, it pulled back here, went up, and came back down. So, it was, it told you right here, it was like going into a bullish trend, right? And then it pulled back. But you see, there was no hidden divergence here, or any kind of divergence for that matter, because it would have had to have been drawn to a dip somewhere in here, okay, where it wouldn't have lined up in here. So that's why I was saying that when the trend starts going up, you cannot draw it from the low. You got to draw it from a pullback with the trend, okay? Then another pullback with the trend. This is drawn from the very low of when it started a bullish trend. This is not divergence. But I'm telling you, if you go on to YouTube and you put in the search thing, divergence, you're going to see all these guys teaching divergence like this. And again, they're not going to explain to you that, the precious part of this where when the market's going up, you wait for it to pull back and then you put in a higher high, right? And then you look on the indicator, right? They're not going to tell you that. They're just going to say, oh, you look on the chart for higher highs and lower high on the indicator. Okay, there you go. Now you know how to trade divergence. Yeah, right. No, you don't. So anyway, I just truly hope that throughout this, course, that I was able to successfully teach all of you guys, all of you ladies and gentlemen, how to see it before it occurs, just like I promised I would. And like I said, back in 2007, I started looking for it, and I didn't know that little precious part, that it puts in a high, then it retraces, then it puts in a higher high. Look for it first on the price chart, then on the indicator. I wasn't told that very, very critical little piece of information, and that's why I couldn't see it for the life of me. I couldn't spot it or see it. Well, actually, at times I could see it. Oh, yes, the fatal flaw. Okay, I got to tell you about that. Yes, next, right after this. Thank you for reminding me, Dwayne. I almost forgot. Okay, so anyway, that's why, I could see the divergence, long after it happened, because I wasn't told that little tidbit, of how to find it, right? Okay, so now let's go and look at the fatal flaw, okay? And there's one right here on this chart. Yeah, thank you, Nico. I really appreciate that. Thank you very much. Okay, so I'm glad that I was able to successfully, teach you guys, even though it was in a repetitive manner, but I'm so glad and happy that I was able to teach you in a way that you could understand it and see it and be able to trade it. Okay, so let's now go look at the fatal flaw. I'm going to remove the questions thing here again, so don't ask no questions now until I say, is there any questions, okay? Please. And then I'll ask some more questions again after I show you this. Okay, here we go. Okay. Let's make this chart smaller, okay? So, we already know that that is the hidden divergence, right? Okay, so let's just move this line here. And let's look at this again. Let's actually just restart the whole thing, okay? Okay, so we knew right here, right, that the market has changed trend from this sideways channel here. It broke out of here, right? We knew that the market was going down. So when the market's going down, as you know, we're looking for three things now, okay? We're looking for easy to see, we're looking for double bottoms, and we're looking for pullbacks for hard to see. Okay, so when the market was going down here, and I already showed you guys this, okay? Now, here's the low and a few lower lows, okay? That created our divergence setup, right? Right. Easy to see divergence, right? Here it is, right here. Okay? So, we had a setup to go long here. You guys know, and remember, I showed you that just not long ago, okay? So, when we drew the trend line, right there, okay, we would have entered long here, okay? Now, as you can see, this move was very short-lived, okay? So what happened? Well, you know what happened. It turned from easy to see bullish divergence, it turned into hard to see bearish divergence, okay? So now you're going, when this if you're, wise enough, or not wise enough, but let's say clever enough after you've seen this after a while and you looked for all these different divergences, if you're in the trade right here, okay, say you got long, here, let me put an arrow there. Where is that? Arrows. Okay, so say you got in right there. There's your arrow. You got in. No arrows on these charts, but we're putting one, okay? And then you go, oh no, I'm long. And you go, holy geez Louise, look at this. Now it's setting up for a bearish signal. What do I do? Well, at that point in time, once this candle closed here, you could bring your stop and set it to break even, okay? Or lock in a pip, hoping that the easy to see bullish divergence is going to work out and it's going to go up, okay? Or if you want to avoid this fatal flaw, but it's going to, it's going to stop you from getting into lots and lots of trades. And that is, instead of trading the easy to see bullish divergence or easy to see bearish divergence or double top and double bottom divergence, you wouldn't trade that at all, okay? You would never get caught in this trap if you didn't trade that, if you only traded the hard to see bearish or bullish divergence, okay? So this is the fatal flaw with trading divergence, is that, hold on a second. Over and over and over again, it doesn't happen all the time, but you'll have, a counter trend trade set up, like right here, and then within a few candles, a bearish opposite trend signal will occur, okay? So the only way to avoid it is to not trade the counter trend divergence. Instead, you only trade the, with the trend divergence, which is hard to see divergence. And that basically is the fatal flaw that I've found with it. I've also heard there's some other flaws with it, but from someone, but they haven't shown me what it is. I haven't discovered it. But this is the one fatal flaw that I've discovered. You have everything setting up here. It broke the trend line. It closed above the trend line. It's a perfect setup to go long. But then right within 2 or 3 candles later, it totally flip-flopped on you, and they just said, hey, we're not taking it up. Instead, we're going to continue with the trend and take it down. And in this particular case, okay, you would have made more pips trading it down than you would have. You would have made more pips selling it than you would have buying it. If you would have bought it, you would have went up 17 pips. But if you would have sold it, it would have went down 30 pips. And that's basically the fatal flaw. So let me see if we have any questions here on that. Does anybody have any questions? Can be a trap because everybody saw the easy to see divergence. Yes, Nico. Yes. It can be a trap. Exactly. So you got to be careful, when looking at this. You got to look for both of them. The hidden divergence is right there, Gerald. You see it? Here and here and here and here. Well, yeah, you could. Yeah, you could do that as well, Phil. You could flip the trade, but it didn't tell you that till over here. Okay, you would have lost money then. But yeah, you would. Yeah, you could have. You could have exactly. You could have lost. Okay, 5 or 7 pips on the buy, and then got short, and then made about 25 or so. Yeah, you're right, Phil. Yeah. Yeah, close in reverse. You can do that as well. You can. But if you wanted to totally avoid it, that's what you would do. You're welcome, Nico. Okay, so here's one from Zoran. I think if on a 4-hour we are downtrend, we can on 15-minute take only the hidden divergence in the direction of the 4-hour. Yeah, well, that's another thing I want to tell you is that if you're going to go and look at multi-time frames, you know, to you know, confirm trends and and confirm getting into trades, a lot of times that can get you into trouble, okay? Because as you know, you look at one time frame, it's going to tell you to buy. You look at another time frame, it's going to tell you to sell. That can be tricky. But this is on a 15-minute chart. You're just looking for little bits of pips, here and there. Yeah. So, in my opinion, I like to trade the chart that I'm looking at. So if I'm looking to get a few pips, I'm looking at the 15. I'm not looking at any other, you know, one other time frame I would like to look at is the 1 hour time frame. But to go to a 4 hour, that wouldn't make any sense to me. But anyway, it's up to you what you want to do. Yeah, in the direction of the natural float. Yeah, Zoran. Yeah, I see what you're saying. You can do that, but yeah, this is basically how I like to trade it anyway. So anyway, that's pretty much it, I guess. I think I've taught you everything that I can covered in this divergence course here. The nice bonus that I gave you guys. Uh, Kenoda, I did show. You mean hidden divergence? You keep saying hidden. I call it hard to see divergence. Okay, you want to see a hard to see divergence in an uptrend? Kenoda, I already showed one. Do you want me to show you one where there's a fatal flaw? Is that what you mean, Kenoda? Um, anyway, okay. Well, I don't know if that's one back there. Let's go see where I found that one. Uh, it just happens to be one. Here's one, ladies and gentlemen, right here. Okay, we had a high and a higher high or a double top, whatever you want to call it, right here. Okay, we had on the indicator right here. There's that divergence I told you about. Okay, then right here. Okay, look at this. Here is that bullish hit. You got me saying hidden divergence now. Hard to see divergence, also known as hidden divergence, right there. See? There's the fatal flaw again. So, if you got short on this one right here, okay, it went down 22 pips. Yeah, you would need about 35 pips. And then it turned into, you would have got out break even if you would have just stopped and reversed. Okay? So, does that show you what I'm talking about for bullish, hard to see divergence with the fatal flaw, Kenoda? I don't know your. Yes, okay. Great. Yeah, that's the exact opposite one of we did of the sell. Okay, so that's pretty much it for this, ending class of this course. Like I said, you guys can go and, do, uh, do, rewatch them over and over again. But as you know, on Monday, we're going to start looking at charts at 6 o'clock in the evening. And I was just wondering, how many people are really serious here, that want to continue to keep learning this and, so that you get it down? How many people here are going to show up? Now, okay, I got a couple I am, there's two. I'd like to know how many people would like to come. Send me an email to forextrendmaster, okay, at gmail.com. Let me know how many people are going to come. I want to know. I want you all to send me an email, okay? Because I don't know where everybody lives, and I don't know if you can make it or not, okay? So we're definitely going to continue looking here at these charts and finding these trades, okay, on the 4 hour. And we'll review what happened on the 15-minute, and stuff like that, okay? So anyway, let me just stop this here, and I'll answer some more questions. One sec.